A woman in Barrie, Ontario has insured her car with the same company for 9 years. She has never made a claim. Not one. 9 years of premiums paid on time, every month, without a single dollar coming back the other direction. Her driving record is clean. No at-fault accidents. No convictions. No lapses in coverage. In October, she receives her renewal notice. Her premium for the coming year, $2,347. Her premium for the year just ending, $1,986. The increase, $361. 18% in a single renewal cycle. The notice explains none of it. It does not explain what drove the increase. It does not identify the rate category change that elevated her premium. It does not mention that the rate increase was approved by the Financial Services Regulatory Authority of Ontario, a public regulator, through a filed rate application that is a matter of public record. It does not mention that she has 30 days from the date of the renewal notice to shop her coverage with other insurers, without any gap in protection. It does not mention that her insurer offers a usage-based insurance program, a telematics program, that would track her driving behavior and could reduce her premium by up to 25%. It does not mention that she installed winter tires 3 years ago and has never notified her insurer, a discount she is entitled to but has never received. It does not mention that her employer has a group insurance affinity program with the same insurer. That would reduce her premium by 11%. It does not mention that as a 9-year claims-free customer, she may qualify for an additional loyalty discount tier that was not automatically applied to her account. She reads the notice. She notes the new amount. She does nothing, because the notice does not tell her there is anything to do. She pays $2,347. The premium she would have paid with the winter tire discount applied, the loyalty tier corrected, and the employer affinity program applied, $1,614. The difference, $733 per year. Over the 9 years she has been with this insurer, accounting for the various discounts she never received, the cumulative overpayment exceeds $4,200. None of that money is recoverable. The discounts apply going forward from the date they are applied to the policy. They do not apply retroactively. She can apply every one of them today, before her next payment is due. That is not a failure to read the fine print. That is the system. To understand why the renewal notice sitting on your kitchen counter tells you so little, you have to understand what auto insurance regulation in Canada was built to do, and what the regulatory framework looked like when it was functioning the way the legislature intended. Automobile insurance in Canada is not optional. Every province requires it as a condition of operating a vehicle on a public road. The compulsory nature of auto insurance creates a consumer protection obligation that does not exist in the same way for optional financial products. You can choose not to buy life insurance. You can choose not to invest in mutual funds. You cannot choose not to insure your car and still legally drive it to work in the morning. Because auto insurance is mandatory, every province in Canada regulates it. The regulator, the Financial Services Regulatory Authority of Ontario, the Alberta Automobile Insurance Rate Board under the Insurance Act, the BC Financial Services Authority for Private Insurers alongside the Insurance Corporation of British Columbia, and the Autorite de Marches Financiers in Quebec, sets the rules under which insurers operate. Those rules include the rates insurers can charge, the coverage they must provide, the notice they must give, the disclosures they must make when those changes are communicated. The regulatory framework was built on a foundational principle that every provincial legislature stated when it made auto insurance compulsory. If you are required by law to buy a product, the seller of that product has obligations to you that go beyond what the free market alone would impose. You cannot shop elsewhere for the mandatory minimum. You are a captive consumer at the base level of the product. The regulator's job is to ensure the price is fair, the product is adequate, and the communication is honest. For several decades following the establishment, this framework functioned with reasonable transparency. Insurers competed on price and service with reasonably clear disclosure. Then two things happened simultaneously, and they dismantled the practical transparency of the system for most Canadian drivers. The first was the explosion of complexity in automobile insurance rating. In the 1970s and 1980s, auto insurance premiums were calculated on a relatively small number of variables: territory, vehicle type, driver age, and gender. The factors were few enough that a consumer could understand why their premium was what it was. By the 2000s and accelerating through the 2010s, Insurance rating models had become extraordinarily complex. Dozens of rating variables, proprietary algorithms, credit-based insurance scores in some provinces, usage-based telematics data, vehicle-specific loss experience, postal code microterritory factors. The premium you pay is now the output of a calculation no consumer can replicate, and that most insurer frontline agents cannot fully explain. The second was the systematic undercommunication of discount entitlements. Every automobile insurer in Canada maintains a rating manual, a document filed with the provincial regulator. Those manuals contain dozens of discount categories. Most of them apply only if the policyholder provides the information that triggers them. Most policyholders never provide that information because nobody asks for it, because the renewal notice does not mention it, and because the insurer has no financial incentive to proactively apply a discount that reduces the premium they collect. The regulatory disclosure obligations did not disappear. The Insurance Act in every province still requires specific renewal notice timelines. The statutory conditions incorporated into every auto insurance policy still establish specific cancellation and renewal rights. The provincial regulations governing unfair practices still prohibit insurers from withholding material information from policyholders. The framework is still on the books. Most Canadian drivers have never read it. Most renewal notices are designed to ensure they never need to. Today, I am going to walk you through exactly what your insurer is required to tell you before your policy renews, and what most of them quietly do not. Let me give you the legal foundation before the practical content. The 30-day notice requirement. Under the statutory conditions, your insurer is required to provide you with a renewal notice not less than 30 days before your renewal date. That notice must include the premium for the upcoming policy period. It must identify any changes to your coverage. It must, in the case of non-renewal, provide the reason and sufficient notice for you to obtain replacement coverage. 30 days is the minimum. Many insurers provide 45 or 60 days. The purpose is to give the policyholder sufficient time to review the terms. Most policyholders treat the renewal notice as a billing notification. It is a billing notification. It is also a legally mandated disclosure document. The distinction matters. The material change disclosure obligation. Under O Reg 7/00, an insurer that fails to disclose information that would be material to the policyholder's decision engages in an unfair practice. What counts as material information? A rate increase of 18% is material. The reason for that rate increase is material. The existence of discount categories that would reduce the premium is material. The existence of a usage-based insurance program is material. The policyholder's right to cancel after renewal with return of unearned premium is material. The regulation does not require the insurer to proactively identify every discount. But the framework creates an obligation that most renewal notices in Canada are, at minimum, testing. The public rate filing. Every rate change that an Ontario automobile insurer implements must be filed with and approved by the Financial Services Regulatory Authority of Ontario before it takes effect. The rate filing is a public document. It identifies the overall rate change the insurer is implementing, the actuarial basis for that change, and the effective date. When your premium increases at renewal, that increase was reviewed by a regulator. You have the right to know the rate filing exists. You have the right to know the FSRA approved it. You have the right to know the FSRA's consumer complaint mechanism exists if you believe the increase was improperly implemented. Your renewal notice typically says none of this. This is where most Canadian drivers are losing the most money. Every automobile insurer in Canada maintains a rating manual filed with their provincial regulator. That manual contains every discount category available under their rating program. Most of those discounts apply only when the policyholder provides the information that triggers them. Most policyholders never provide that information, not because they are withholding it, but because nobody has ever asked. Let me walk through the discount categories that are most commonly missed and most commonly worth significant amounts. Winter tire discount. Every major automobile insurer in Ontario offers a premium discount for vehicles equipped with winter tires. The discount ranges from 5% to 10% of the winter season premium across most insurers. The discount requires notification. The policyholder must tell their insurer that winter tires are installed. The insurer does not ask. The renewal notice does not prompt you to disclose it. A driver who has been installing winter tires for 7 years without notifying has been paying the higher rate for 7 years at a 5% discount on a $2,000 annual premium, $100 per year. That is $700 in overpaid premium across 7 years. The notification is a phone call or an online policy update. It takes 5 minutes. The discount applies at the start of the following billing period after notification. Telematics and usage-based insurance. Every major automobile insurer in Ontario now offers a usage-based insurance, UBI, program. The program uses a telematics device installed in your vehicle's OBD2 port or a smartphone app. Metrics typically include braking patterns, acceleration, speed, time of day, and mileage. The discount available through a telematics program ranges from 10 to 30%, depending on the insurer. Some insurers guarantee a minimum discount simply for enrolling, 5 to 10%. The telematics program requires enrollment. The renewal notice does not explain the program in any meaningful detail. Most drivers who would qualify have never enrolled because nobody has explained the potential saving in concrete terms. A driver with a $2,347 annual premium who qualifies for a 20% telematics discount is paying $469 per year more. Group and affinity discounts. Most major insurers have group or affinity programs, arrangements with employers, professional associations, that provide a negotiated premium reduction to members. The discount ranges from 5 to 15% depending on the group. Common groups include public servants, university alumni, professional college members, nurses, engineers, teachers, and members of major unions. The discount requires the policyholder to identify their group membership. The renewal notice does not ask. Many policyholders are unaware that their employer or professional association has a group arrangement. Multi-vehicle discount. A household with 2 or more vehicles typically qualifies for a multi-vehicle discount, ranging from 5 to 15% across most insurers. The discount requires all vehicles to be on the same policy or link policies with the same insurer. A household that insures one vehicle with one company and a second with a different company is paying higher rates on both. The renewal notice for either policy does not ask whether the household has a second vehicle insured elsewhere. Loyalty tier discounts. Many insurers have tiered discount structures. A customer with 5 years receives a higher base discount. A customer with 10 years receives a higher discount. These tiers should apply automatically. They do not always. Rating system errors, policy migrations, and broker transfers can all result in a loyalty tier being reset or misapplied. A claims-free policyholder of 9 years who is being rated at the 2-year loyalty tier is paying significantly more. Verifying your loyalty tier requires a direct question to your insurer or broker. The renewal notice does not tell you which tier you are on. The professional and retiree discount. Some insurers offer discounts for specific professional designations based on actuarial data. Others offer a retiree discount for drivers who no longer commute. These discounts require disclosure. The application form collects occupation, but occupational data on file may be years old. A driver who retired 4 years ago and whose policy still lists their former occupation is not receiving the retiree discount. One of the most important provisions is the policyholder's right to cancel. If you cancel within a short period of the renewal date, typically within the first 30 days, most insurers will provide a prorated return. Some treat this as a free look period. Others apply a modest short rate. The specific terms are in your policy document. What this means practically: if your renewal takes effect on November 1st, you have until approximately November 30th to shop your coverage. You are not locked in for the year simply because the renewal date has passed. The notice period exists specifically to give you time to make this decision. Most drivers treat the renewal date as the point of no return. It is not. The practical sequence for using this right: receive renewal notice. Note your renewal date. Begin shopping immediately. If you find a lower rate, arrange new coverage to begin on or before your current policy's renewal date. Cancel the existing policy in writing, by email, or registered mail, effective the new policy's start date. Request the return of any unearned premium if you prepaid. The entire process can be completed in a week. Automobile insurance regulation in Canada is provincial. The rights and protections available to you depend significantly on which province you are in. Ontario. Ontario has a private automobile insurance market regulated by the Financial Services Regulatory Authority of Ontario. In Ontario, every rate change by every insurer requires FSRA approval through a rate filing process. Rate filings are publicly available. Rate filings are publicly available at the FSRA website, fsrao.ca. You can search the approved rate change for your insurer by name. The filing tells you the percentage rate change, the actuarial justification, and the approval date. The FSRA's Consumer Office handles complaints about insurer conduct, including failure to apply discounts. FSRA Consumer Line 1-800-668-0128. The General Insurance Ombuds Service, GIO, provides free dispute resolution for personal lines insurance disputes. GIO contact 1-877-225-0446. Ontario's Statutory Accident Benefit Schedule, SABS, under O, Reg 3410 establishes the minimum accident benefits. Insurers may offer optional enhanced benefits beyond the mandatory minimum. The renewal notice is required to identify any changes. British Columbia. BC operates a hybrid system. ICBC, the Insurance Corporation of British Columbia, provides mandatory basic coverage. Private insurers can offer optional extended coverage on top of the ICBC basic. ICBC's mandatory basic coverage is government administered. Rates are set by the BC Utilities Commission under rate applications filed by ICBC. Rate changes must be approved through a public process. BC drivers can intervene in ICBC rate applications through the Utilities Commission process. ICBC moved to a driver-based insurance model in 2021, a structural change that tied premiums more directly to individual driving records. BC drivers should confirm their current discount level through their ICBC Autoplan broker at every renewal. The BC Financial Services Authority, BCFSA, regulates private optional insurers in BC. BCFSA Consumer Line 1-866-206-3030. Alberta. Alberta has a private insurance market regulated by the Alberta Superintendent of Insurance under the Insurance Act. Rate increases above the AIRB grid maximum require AIRB approval. AIRB rate decisions are public documents available at airb.com. Alberta's grid rating system sets minimum and maximum rates for each driver profile based on years licensed and claims history. If your insurer is charging above the grid maximum for your profile, the charge is not legally permitted. Alberta eliminated the cap on optional coverage premiums in 2019. Optional coverage is priced by the insurer without a grid maximum. Quebec. Quebec operates a hybrid system similar in structure to BC. The Société de l'Assurance Automobile du Québec, SAQ, administers mandatory coverage. The SAQ premium is collected through vehicle registration. It is not a separate insurance policy. The SAQ premium is set by the government. Private insurers provide property damage coverage. Private insurance in Quebec is regulated by the Autorite de Marches Financiers, AMF. The AMF's consumer complaint and arbitration services handle disputes about private auto insurance in Quebec. AMF line 1-877-525-0337. Nova Scotia. Nova Scotia has a private automobile insurance market regulated by the Nova Scotia Utility and Review Board, NSERB. Then NSERB reviews rate filings and can approve, modify, or reject proposed rate changes. NSERB decisions are publicly available. Nova Scotia's Direct Compensation Property Damage, DCPD, regulations govern how insurers handle property damage claims when you are not at fault. New Brunswick, PEI, Newfoundland, and Labrador. Each Atlantic province has a private insurance market regulated by their respective utility and review boards. Manitoba. Manitoba operates a public auto insurance model through Manitoba Public Insurance, MPI, under the Autobot program. MPI rates are set through a public utilities board rate hearing process. Rate applications are public. Residents can participate or monitor hearings. Saskatchewan. Saskatchewan operates a public auto insurance model through Saskatchewan Government Insurance, SGI. SGI's basic coverage is provided through the Auto Fund. Before escalating to a provincial regulator, every licensed automobile insurer in Canada is required to have an internal complaint handling process. Under FSRA's market conduct requirements, every insurer must maintain a written complaints procedure and provide acknowledgement. The internal complaint process is the mandatory first step. It is also the step most policyholders skip because they do not know the right exists. The correct sequence for a renewal dispute. Step 1. Identify the specific issue. Is it a discount not applied? An incorrect loyalty tier? Be specific. Step 2. Contact your insurer's complaint handling department, not the general line, the Office of the Ombudsman or Customer Relations. Ask for it by name. Step 3. Document the response. The insurer must respond in writing. Keep every communication. Step 4. If unsatisfied, escalate externally. External escalation is free. No lawyer is required. The process is designed to be accessible to individual policyholders. Myth 1. My rate went up because of general inflation. There is nothing I can do. Rate changes are approved through filed applications. A general rate increase of 5% does not explain an 18% increase. Ask your insurer specifically why. Myth 2. Switching insurers is too complicated and will create a gap in my coverage. A transition is coordinated to avoid a gap. Your new coverage begins on the date you specify. No gap occurs if timing is coordinated. The entire process can be done in a day. Myth 3. Telematics programs are an invasion of my privacy and are used to increase my rates. Participation cannot result in an increase above base. The programs are designed to provide a discount or no change. Data is governed by PIPEDA and provincial privacy legislation. Myth 4. My broker is shopping the market for me at every renewal. Not all brokers shop at every renewal. Some renew automatically. Ask your broker directly. Did you obtain quotes from other insurers? If no, ask them to do so. You can also obtain quotes independently. Myth 5. A claims-free record automatically means the lowest rate. A claims-free record is a foundation, not the only factor. Two claims-free drivers in the same postal code can have premiums that differ by 30% based on discounts applied. Pull out your renewal notice today and write down your renewal date. Count back 30 days. That is your shopping window. Call your insurer or broker and ask specifically about every discount category. Do not ask generally. Ask about winter tires, telematics, and loyalty. Enroll in your insurer's telematics program if you drive fewer than 15,000 kilometers per year. Lower mileage drivers are the primary beneficiaries. Notify your insurer if you installed winter tires. Call or email today. Ask for written confirmation that the discount has been applied. Obtain at least 3 renewal quotes from competing insurers or through a broker. Use your renewal notice as the baseline. Provide complete info. If you believe your premium contains an error, file a formal complaint. Write to the complaint handling office identifying the error. Request a written response. If you are in Ontario, verify the filing at fsrao.ca. Search rate filings for your insurer. If your increase exceeds the filing, ask for an explanation. Free resources at no cost to you. FSRA 1-800-668-0128. GEO 1-877-225-0446. IBC 1-844-2 Ask IBC. These regulators are there to help you. The woman in Barrie who has insured her car with the same company for 9 years. 9 years without a claim. 9 years of premiums paid on time. An 18% renewal increase. A notice that told her what she owed and nothing else. She does not receive the discounts she is entitled to. The annual difference, $733. She can close that gap today. The conversation she did not know to ask for starts today. The annual difference, $733. She can close that gap today. The conversation she did not know to ask for starts today.